Understanding Section 29 of the Central Goods and Services Tax Act, a training guide for tax professionals. Section 29 of the CGST Act addresses GST registration cancellation or suspension. Understanding its key components is essential for tax professionals assisting businesses with compliance. This tutorial aims to clarify Section 29 and equip you to manage cancellation scenarios effectively. Cancellation of GST registration happens when a taxable entity stops GST activities or is non-compliant. The proper officer may cancel registration on their own initiative for compliance issues. Upon application by the registered person or their legal heirs, particularly in cases of proprietor death, it's crucial to follow the prescribed procedures and timelines. The cancellation of goods and services tax (GST) registration may happen under certain conditions. Discontinuation of business applies when a business ceases operations, is transferred, amalgamated, or disposed of, including closures due to the proprietor's death. Change in constitution occurs when changes in the business structure invalidate the previous registration. Liability changes happens when the entity no longer needs registration or voluntarily withdraws from GST. Tax professionals should assess these scenarios with clients to determine if cancellation is necessary. During cancellation, registration may be temporarily suspended to minimize filing burdens. This suspension offers operational relief while applications are resolved. Knowing these provisions helps you guide clients through this phase smoothly. Tax professionals must identify compliance risks leading to involuntary cancellation, such as failing to file returns for over 3 months, missing returns during a continuous tax period, registering through fraud or suppression of facts, not starting business within 6 months of registration. A registered person must have a chance to be heard before finalizing cancellation, ensuring fairness. Cancelled registration doesn't absolve the taxpayer from prior liabilities. Businesses must fulfill all outstanding dues, including taxes, levies, and interest applicable up to the cancellation date. This ensures accountability and safeguards revenue collection. For tax professionals, this reinforces the importance of thorough record keeping and accurate tax filing to avoid challenges after registration termination. Under the GST framework, cancellations under the state or union territory GST acts are generally treated as cancellations under the Central GST Act. This interconnection simplifies compliance but requires businesses operating across jurisdictions to remain consistent in filings and document handling. Even after cancellation, the taxable person must settle liabilities tied to inventory and capital goods. Key rules include: for stocks, amount equivalent to either the input tax credit, ITC, claimed or the output tax payable on stock, whichever is higher. For capital goods, plant and machinery, ITC claimed must be adjusted by a stipulated percentage or taxes calculated on the fair transaction value of assets. These liabilities can be offset via the electronic credit ledger or cash ledger, offering flexibility in fund management for businesses. Detailed procedures for calculating dues upon cancellation are prescribed within CGST rules. Understanding these computational guidelines ensures that businesses settle their accounts accurately and avoid penalties. Section 29 establishes a framework for compliance during business changes. Tax professionals must help clients avoid violations and manage liabilities, enhancing trust and protecting the taxation system's integrity. Staying informed about GST provisions aids in compliance and helps businesses and consultants navigate complexities. Tax professionals interpret complex laws into actionable strategies. Use this guide to confidently advise clients on Section 29 and reinforce GST compliance.